Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about 4 high quality exchange traded funds that are available in US dollars and allow investors to have solid, reliable dividend distribution income. These ETFs pay dividend distributions anywhere between 3% all the way to close to 11%. You don't want to miss these ETFs for a reliable passive income. So let's get into it. All right, our very first pick is Super Dividend ETF, the ticker symbol SDIV. It is offered by Global X by 𝐁𝐈𝐿 Asset. And you notice that this ETF has the potential for increasing a portfolio yield, accessing 100 of the highest dividend paying equities around the world. It does pay its distributions on a monthly basis, which is reliable and awesome for dividend investors. It also gives you exposure globally with investing in equities from around the globe that can help diversify both geographic and interest in rate exposure. Looking at some of the key information for SDIV, it has about $867 million in assets under management. It was incepted back in June of 2011. The expense ratio or fee here is looking at 0.58%, which what it entails is that if you were to invest $10,000, you would be paying a fee of $58 in 1 year. The ticker symbol is SDIV, and SDIV has 96 holdings as part of it. In terms of the distribution yield, we're going to talk about that. The annual distribution yield for SDIV currently is at 10.18%, quite remarkable, and its distributions are paid on a monthly basis. It seeks investment results that correspond generally to the price and yield performance before fees and expenses of the selective global super dividend index. Looking at the price point for this ETF, SDIV was last traded at the price of $11.21. In the last trading day, it was down by 0.18% of a share. As for the performance of this SDIV, the 1 year return at the end of December, we were looking at the market price return of positive 3.76%. At the end of, again, the same time frame, the 3-year annualized return was negative 2.55%. 5-year annualized return was negative 2.5%, and 10-year annualized return was at 2.41%. As for the top holdings for SDIV, we are looking at on our top part is Logan Group Co. Limited with about 1.63% exposure. Next, we have Times China Holdings Limited, and followed by China Aoyuan Group Limited. These are the top 10 holdings listed here. If you want to look at the entire 96 holdings, you can simply click on the entire list and you see all the holdings that are provided here. We're going to try to take a look at the exposure globally and geographically as well to get a sense of that as well. So maybe we'll start there. Your biggest exposure is to US equities, 32% exposure there, followed by China, Hong Kong, Britain, and Brazil. You also have Australia, Thailand, South Africa, Russia, Portugal, Bermuda, and other exposure. As for sector breakdown, your biggest exposure is to financials with close to 30% of your exposure, followed by real estate and energy. The rest of the sector exposure is listed here as well. And these dates are as of end of February. Lastly, if you look at the risk rating for the ETF risk stats, you're looking at a beta of 1.22 compared to that of S&P 500, suggesting that more volatility for this ETF versus that of S&P 500. All right, our second pick is a Blackrock ETF, iShares Core High Dividend ETF, the ticker symbol HDV. HDV has been last trading at the price of $107.31, and so far in the year 2022, it's up by 5.91%. It has an expense ratio of only at 0.08%, which is quite minimal, meaning that if you invested $10,000 in HDV, your fee at the end of 1 year would be only $8, much lower than that of SDIV. Why one might consider investing in HDV is to get exposure to established high-quality US companies which accesses to 75 dividend-paying US stocks that have been screened for financial health as a result of that. Here, if you look at the average annual return at the end of December 2021, just so that it's apples to apples comparison, the total return in the 1 year based on market price was at 19.44% positive return, 3 years annual return of 10.34%, 5 year annual return of 8.12%, and 10 years annual return of 10% plus. The annual return since inception is showing to be at about 10.5%. Looking at the time frame that this ETF was founded, HDV was incepted back in March of 2011, and it has close to $9.2 billion in market cap. As for the distribution frequency, we are looking at a quarterly distribution. And if you look at what that distribution is like, the 12-month trailing yield is currently at 3.40%. Let us take a look at additional details. For instance, what is the fees? We talked about the 0.08%. As for the holdings, you're looking at the top 10 holdings here. Include ExxonMobil, AbbVie, JP Morgan, Johnson & Johnson, Chevron, Verizon, Procter & Gamble, Philip Morris International, Merck & Co., and Broadcom. These are your top 10 holdings. And of course, if you want to look at the entire 81 holdings, we can simply scroll through the list and provide you a quick view of these businesses and companies that you would get exposure to through investing in HDV. All right, we are going to lastly take a look at the breakdown by sector as well as geographically. The biggest exposure by sector is to healthcare at about 23% exposure, followed by energy and consumer staples. Lastly, if you look at the breakdown by geography, as we talked about it, the entire breakdown here is to US companies. With that out of the way, let's take a look at our third pick. It is a Vanguard ETF, Vanguard High Dividend Yield ETF, with ticker symbol VYM. Here, through VYM, you seek to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. Mainly, it is exposure for large value and has an only expense ratio of 0.06%, the lowest expense ratio so far among the 3 ETFs that we've talked about, which means if you invest $10,000, you'd be paying only a fee of $6 at the end of the 1 year. The distribution yield here for the 30-day SEC yield is at 2.75%, and it has a risk rating of 4. The higher the risk rating, the more risk that you're getting exposure to, but potential for more reward. As for the performance of VYM, you notice here the returns at the end of December by 1 year, as shown here, at 26.14%, 3-year annual return of 16.6%, 5-year annual return of 11.7%, 10-year annual return of 12.9 or close to 13%, and lastly, annual return since inception of this fund is at 8.8%. The inception goes back to November of 2006 for VYM. Looking at the exposure and composition by sector, your biggest exposure from the list appears to be to financials with 21.6% exposure, followed by consumer staples and healthcare. As for the number of holdings for VYM, you're looking at 410 different stocks, and this fund has $55.2 billion in assets under management. The top 10 holdings account for about 23% of your overall size of these holdings. These account for about that. And the top 10 holdings, we have companies such as Johnson & Johnson, JP Morgan, Procter & Gamble, Home Depot, ExxonMobil, Bank of America, Chevron, Pfizer, AbbVie, and Coca-Cola. This is the breakdown for VYM. And lastly, our fourth pick here is iShares Emerging Markets Dividend ETF, ticker symbol DVYE. As the name suggests, here you're getting exposure to emerging markets. The year-to-date return, though, has been horrible. It's down by close to 15%. You're looking at the expense ratio of 0.49%. The last trading price for that was at $32.69, closer to its 52-week low price range. Here, it gives exposure to a broad range of established companies in emerging market countries and access to 100 dividend paying emerging market stocks. Looking at the past return, average annual return by market price, 1 year at the end of December was at 11%, 3-year was annualized return of 7.7%, 5-year annualized return of 8.4%, and annualized return since inception was at 1.76%. The inception date for this fund goes back to February of 2012, and the distributions are paid on a quarterly basis. Look, as for the distribution, since you talked about it, the 12 months trailing is showing to be at 8.28%, and 30-day SEC yield is at 7.72%. Let us move on. We talked about 118 different holdings here as part of this fund. And if you look more closely at these, you're looking at the top 10, including companies such as Riverstone Holdings, Exaro Resources, and Top Glove Corporation. If you wanted to look at the entire list, you can simply click on Show More, and it lists the entire list of holdings that you would get exposure to through this fund. I'm just going to quickly scroll through it just for your reference, in case that's something that interests you and you want to get more detailed of. And of course, all details are available on through their website on the Blackrock. Sector breakdown, your biggest exposure is to materials at 19%, followed by real estate and financials. Closely following it is utilities and energy sectors. As for geography, because it's emerging markets, your biggest exposure is here to Brazil at close to 26%, followed by China, Taiwan, Malaysia, and South Africa. The rest of the countries are also shown here. If you want to see the entire exposure, you can simply click on Show More, and it gives you more details, as you notice here. And the map also identifies it by the countries are highlighted in actually green color. It gives you the exposure and gives you some idea where the exposure is coming from in those emerging markets. Well, there you have it, folks. A quick look into 4 high-quality dividend-paying ETFs that allow you to invest passively in the stock market for a reliable passive income. I hope you found this video beneficial and gained something of value from it. Leave us a comment down below and let us know what other dividend-paying ETFs you are exposed to and invested in. We would love to hear from you. If you found this video beneficial, don't forget to smash that like button and share it with someone else who might benefit from the video. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing dividend-paying stocks, ETF. We also talk about growth stocks and penny stocks. We talk also about cryptocurrency, real estate investing, and of course, discussing ways to reach financial independence. Thank you once again, and I hope to see you next time.